And let me double check that we are rolling here on X. Track down this link. Okay, I think we're good. All right, everyone, welcome to Wolf Crypto. Welcome to the trading education stream. Today, we're going to be focusing on day trading futures. We're also going to dive into charts and normal TA. We have the huge benefit of being joined by a professional trader, Minx, who's been doing it a long time. She's got her own community of people. She's very, very active. A lot of people have been hitting me up about futures, and I don't know the futures game like that. And I was like, okay, now I'm getting curious. And so I started asking around, and then, you know what? It just so happens that this Friday we had Minx coming on, and I was like, this is going to be great. So I'm really excited to dive in. Minx, thanks so much for making some time. I'm really excited to dive into the charts and learn a bit more about futures.
Oh, well, thank you for having me.
Absolutely. So first off, I was going to say, if we could just do a quick little thesis / breakdown of why futures, and then even maybe right before that, what was sort of your, like, how did you get into trading? How has it been? Like, how long have you been doing it? Maybe like a super quick, elevator pitch version of it, and then we can dive into the thesis around futures, why so many people are getting into it.
Sure. So I started trading back in 2018, 2019, just small caps, and it was more of like a swing trades. But then I started kind of getting even more into day trading just with the small caps, and then I got into crypto. So I was just in meme coins with Dogecoin and Shiba and all of that kind of stuff. And again, I just trading drew me into. I think we all have that. Once you kind of start, you just want to keep going. You become obsessed with it, I suppose. But I did small caps and crypto, and then in 2021 I started doing options. So I was trading options in large cap stocks, equities, whatever. And so for about 2021 is when I was a full-time trader. Then is when I started full-time, I should say. But as much as I loved options, at the same time it was kind of like, I think I was around the wrong group of people, and it was kind of more like gambling at the end of the day. Contracts would expire worthless. At least when you're trading large cap, equities, just shares, if you hold on to them, they'll eventually go up, right? But it's not like that with options, because there's the Greeks, the theta that eats away your contract. And so I still continue to kind of search for different things. And a friend of mine told me about futures, and I kind of asked around, and everyone that I asked said, no, futures are not for us. We're retail traders. This is for big boys. This is for institutional traders, professional traders. It's not for us. And when someone says something like that to me, it kind of perks my interest. Like, why is it for somebody but not for us? Why? So I started digging deep into it and found out that actually futures is more akin to trading stocks, and shares, than it is options. So I started digging, more into it, found, prop firms, and that's I've been trading futures for over 2.5 years now.
Wow.
And I still trade options sometimes, but not as much. To me, options are more of a lotto. Sometimes it works out, sometimes it doesn't. I feel like I always say I'm a jinx to options. And to everybody that gets into that position, if I get into it, something out of the left field will come out. Some like news. It's not even a technical analysis. Like, I can't even remember a few of these, like that we, got in. News out of the left field came out. Like, the government, the feds are investigating intel for something, and then the whole thing dropped. And so I've kind of stayed away from options, and just I've been teaching the community about trading futures. You can self-fund. You don't have to go through a prop firm, or go through prop firms. So utilizing a finance partner is kind of what most are liking. And probably the biggest reason is, at the end of the day, capital. Most traders are undercapitalized. So when they go into trying with a prop firm, if you've been trading for for some time, even if you haven't, if you learn technical analysis, if you're around a good group of seasoned traders that know what they're doing, and as long as you're open to learning, and taking it slow, this is a sim account. You're not gonna you're not gonna lose $10,000 trading with a prop firm, because you just basically lose that small challenge fee.
Yep.
And depends on what prop firms. Some of them are you know more pricier than others, but they all have obviously rules and things like that. So
definitely, that was an awesome breakdown. I had no idea that you had started. Well, I guess I kind of knew. I think you had told me briefly, but that's interesting about the options there. So, well, I saw a comment here from Bruce. Futures is the future. So that was my question. So with futures, if you could just what is it exactly you're trading? And then the second thing would be, I guess it is this. Is futures the future? Is this going to be the next pop? Are a million new people about to join and specifically enter futures? Is there a benefit to getting in right now that you see?
Oh, absolutely. So I trade, NASDAQ, which is NQ. So if you're trading options, it's basically like trading, the QQQ chart, or if you're trading S&P 500, you're trading SPY or SPX for options, you can trade ES. So essentially, if you know how to chart those, you can chart futures. So, I guess is your question is what is futures? Like, what are
Yeah,
they?
it's well, what are you selling exactly? To explain to someone.
So basically, futures, trading is, it's a contract between a buyer that's looking to invest and a seller, where the contract is made for the future. And, it does have an expiration date. There are two participants, hedgers and speculators. So hedgers are usually, they protect their assets from risks, and speculators are usually floor traders. So we're retail traders, so we are considered to be speculators. There's different so they're just contracts. They're not, you don't own any futures like shares or things like that. It's not like a what am I trying to
Okay.
they're just contracts basically,
Yeah.
that you're buying. You're speculating on prices. So they're, they come from different assets, such as, uh, commodity futures, currency, metal futures, equity index futures. So I trade majority of the time equity index futures, which is, the NASDAQ or ES. Sometimes I'll trade oil. So, that kind of a thing. But
Mm.
there's no theta, there's no IV, there's no any of that. So basically, your stop losses can be placed at precise price points. Um, each contract does have like an expiration date, and including, the size of the contract. But it also, one thing about futures is that it moves in tick sizes. So that's the minimum price movement. So for example, I'll just use oil, since oil is,
Sure.
um, so one tick on oil, I have this pulled up here, is 1 penny. So right now oil is trading at, like, let's just say 70. I'm just going to use easy numbers. $75. Okay. It's a 76, but each penny that it moves is $10. So if it moves from $75 to $76, each tick or each penny, that's $1. That $1 move is called one handle or 1 point. There you basically make or lose $1,000. So
Wow.
if you are trading NASDAQ or NQ, which is majority of us that trade it. So like right now we're trading at 21,000. Each dollar that it moves is specific, it's 1 point, but it's $20 for each point. So it changes value by $5 per tick, because on indexes the tick size is 0.25. So in $1, it's basically like every quarter that it moves. So it moves $5 for every tick, or $20 for every point, whereas if you're trading ES, it's $50 per point, or $12.5 for every 0.25 cents that it moves. So $50 per point. So it just kind of depends what you're trading. And another thing is futures is open 23 hours a day. So it gives people more of a flexibility. If you work full time, you can, some people trade early in the morning, some trade at night. I would say the best time to trade is during the New York Stock Exchange, during the open, the first 2 hours, and also like London time, which is around 2 or 3 in the morning Eastern time. Again, it just kind of depends on people, but you don't lose value, like basically like with options. You even if it's going in the right direction, you could still be at a loss because of theta, that was eating the contract. Whereas, with futures, it's not like that.
So for people who are like in crypto, right? They're thinking, so for the app, for a lot of traders, they lack a lot of the information that would probably answer some of their questions, but they're saying, okay, you're trading oil. They're like, why would you trade such a massive like entity of an asset? Like why wouldn't you trade like a meme coin with a $3,000 market cap if you want to lock in those insane gains? And I think that's like the one thing that they're missing is like you are able to unlock some pretty cool gains with, especially when you're talking about these points. 1 cent is, you said $50 for a cent?
No. For oil, 1 cent is $10. So if oil goes from 70, so let's say the oil goes from $75 to $76, and let's just say you were long in it. That's for one contract. That's $1,000. And let's say today. So I'll give you an example. Let's see how much did we move. I called out a 286 point drop this morning, live on Spaces.
Wow,
so
all right.
Yeah, so this drop here, I called it down. And so 286 points. Now, I didn't hold the whole time, obviously, but I scalped. I took profit, got back in when we had, a little bit of a reversal, this and that. So 286 points. If you take that times by $20 for one contract, it's $5,720.
Oh my gosh!
So that's one contract. Majority of the time, and again, if you're new, you're not going to be trading,
right,
like this by any means. But at the end of the day, I know everyone is out there trying to get rich overnight. That's not going to happen. It's not going to happen in futures. In meme coins, I've been in meme coins for a long time. I've gotten lucky a few times. I've also got, screwed a few times. So we know how that kind of works, trying to chase the shit coins or whatever it is. But if you just take your time and you become consistent, you will make money. I mean, especially the reason why I feel like everybody's flocking over to futures is because of these prop firms. So these prop firms allow you to utilize multiple contracts at a time, even though, you probably shouldn't. You need to know the right sizing of the account. Just because it says you can buy 17 contracts does not mean you should. If you did buy 17 contracts on that, let's just say you had 17 contracts this whole time and it dropped, you would have made like 97 grand in a matter of a couple of hours. But that's not the reality of it, right?
What would the reality look like for someone who's like, okay, I joined a month ago, I've taken a few trades. Like, what does that even look like for someone who gets into the game? And then maybe they have a couple of years of experience or something in trading, but they're relatively new to futures. Like, what can someone expect when they write it? Is it very similar to when you start trading? It's like, hey, you got to commit the next year to even kind of know where you're standing.
No, I don't think you would have to, commit a year by any means. If you have been trading, especially if you've been trading, the Web 2, it's probably going to take you, I don't know, 2 days, or even not even that,
Oh
maybe
wow.
a day to like figure out just the way the price action moves. Like I said, if you're
Mhm.
charting, SPY, and your charting SPY is going to go up, so instead of buying calls, you would just go long on ES. Um, that's basically, how it works. But if you are, in crypto, if you know how to trade, so I do know some crypto, folks know how to also do technical analysis. Same thing. A lot of times, these technical analyses are similar. If you're using Fibonacci, on Bitcoin or Solana, you can use that on NASDAQ or ES. It doesn't have to be, um, it's not something like out of the blue that you don't know what to expect. Obviously, it's a learning curve, and I would never suggest anybody to jump in trading NQ. There's more to it because you can trade micros of this, like M and Q. So instead of like the, uh, it's a basically micros are 1/10 as small as e-mini contracts of the same type. So basically, it's a $5. Like if you're trading ES, or sorry, S&P 500 ES, you would be trading MES. And it's just a micro contract. And instead of changing value of $12.50 per every 25 cents that it moves, or every quarter that it moves, it would change the value of $1.25 for every quarter. So it would be like $5 instead of $50. But when you're learning, you don't need to be trying to get as much as money as you can. I think that's where actually a lot of people go wrong, is that they see how easy it is. I don't want to say it's easy, but in a way it is. They see how it works, and they start seeing a P&L that they never saw in their life. And what starts happening is you become greedy. So, that greed just, is just as fast as you make that money, it's how fast you can lose it as well. So it's
Um,
all about just like
True.
becoming consistent and starting out small. And also, uh, just learning more about it, and be careful. Like, uh, risk management is the number one thing. It doesn't matter what you're trading, but
Mhm.
just be careful with your emotions. So
Yeah. One thing I learned when I first was learning how to trade, my main thing that I was trying to get over was, and I think this will be helpful for any new trader. I was like, how is it that you're going to stay consistent when you're going to lose like tons of trades? I'm like, it doesn't make any sense. Like, how can you keep losing trades and still be profitable? And they're like, well, it's the risk reward. You don't hold your position and go down, and lose your whole position. He's like, you have the stop loss. You only lose 10% or 5% or whatever it is. And then you get stopped out. He was like, that's why you can. And if you proportion it right, you're like, hey, I want to do only 4-to-1 risk ratio. Then look, you can lose 4 and still win 1, and you're profitable. But if you're taking a bunch of 2-to-1 and you get a couple unlucky ones, you're kind of screwed from the start. So I agree with you. Like, learning those fundamentals and saying this is a skill set that if I learn and do well, it's like any other skill set. Like if you learn how to be a chef and then you marry someone, you're cooking, dude. Well, you're quite literally cooking in this case. You're like, yo, I'm a chef. My partner's gonna be like happy forever because I know this skill set, not because I can make one cool steak dinner kind of thing. I think it's the same for trading. It's like, hey, can I lock in a skill set that can make me anywhere from $1,000 a month to, I'm sure, hundreds of thousands of dollars a month to the millions one day. It just makes sense to me. I'm like, the skill set you won't lose the skill set because people will continue to trade. And people are saying, what about the AI algorithms? And I'm like, I don't know. I really don't know what to say to that, actually. Do you have any thoughts on that?
on the AI algorithms,
Yeah.
I I don't. I mean, I use some algos, but they're based on my technical analysis. So basically, it's just someone like entered a code into TradingView based on my trading. Has to meet a certain criteria, and then it'll fire off. Um, when to take a trade, or a reversal is imminent or something like that.
Mhm.
So like here. and these are indicators. I need to actually clean this up. I'm not sure why it looks like that. But just like, here we've got where it's kind of showing us that we are approaching a top and a reversal is imminent, right? And this right here, we were trading at $21,885. Okay. We came down to 21,647. Furthermore, we came down to 21,230-ish this morning. This is my algo. So if I shorted from here, and this was Monday, January 6th, if I, stayed the whole time in a short, that alone, I don't even know how many points that is. What, 896? Let me see. 20,896 minus 21,280-ish or something like that. 21. I'm just it's like 600 points. Now we've seen NQ drop 1,000 points in a day. That happened not too long ago, back in December. Yeah, but I mean,
did you write that one down or not?
Hell yeah, I did.
Let's go. 2 points for me.
That's like that is. I don't know why, but I love, like, you've been in meme coins, right? When you start seeing the red candles and then all of a sudden, like, it's panic selling, right? Well, same thing for for futures. A lot of people love to long, and I do too. Like, I'll long, but I don't love it. I like to short just because, like, look at these candles when I'm shorting. Compared
that's a
to
good point. That's a good point. They will sell faster than they'll buy, I imagine.
Absolutely. It's stairway up, elevator down. And I like the elevator. So, it's like from here, boom, we came down in a matter of, like, I don't know, a couple of hours. Whereas, like, it took us all day to grind back up, or, so it's just it's like a momentum, and it's kind of an adrenaline rush too, I suppose, when you're trading.
It's also very helpful because, especially in my case, one of the reasons I wanted to learn to get better at the trading was because at some point a bear market will come and it's going to get ugly and everything's just going to be down only for a long time. And I figured there's no reason to leave the market. I should just keep doing my normal work and then take that money and invest it, and then take a portion of the money and see if I can trade and short the market. I just got to learn how to short, because I want to have spaces and streams, but nobody's going to come unless you know how to trade a market that's going downward. And that's not the majority of people, I don't think. I mean, what percentage of traders do you think even have a account that would allow them to short? You can't just short anything on Robinhood, or, well, I guess well, they maybe have features. I haven't really checked Robinhood and dove into all the features, but not every platform allows you to short. Sometimes you have to get a broker, you have to get a new app, you got to call someone and link it up. So I think for a lot of people, they just miss out on shorts and they leave the market. And I'm like, that's such a bad idea.
Yeah. So it depends what you're shorting. If you're shorting NASDAQ or futures, you are allowed to short. You can short on your platforms. Robinhood doesn't even have futures yet. I think they're finally coming around and getting that. But other brokers have it, and you can short it because that's just, it goes up and down. But you are absolutely right. I would say that majority of the people just know how to long. And so over the past year, all they did was long, and we went up, right? But at the same time, you're leaving out money on the table if all you're doing is just longing. Because, see, I can long from here to here and then reverse my position and make money on the way down. So not very many know how to do both. Can
you give us some? We don't have to walk through the whole process and literally sign up. But if someone was to say, okay, it's time, I'm watching this, I'm going to join Minx's Discord probably, and I'm going to get into all this stuff. Where do I even go? Like, do you just Google, prop firm first, or is the first thing, hey, find a platform? Is the first thing something else? What would you say?
No, so like I teach. I do webinars. Actually, I have a web. If you go to my profile, there's a thing called Futures Basics.
You want to pull it up, actually? Feel free. I can also do it if you want me to pull up the Twitter. I can walk you through. Does that make it easier for you?
Let me see. I got to pull up Twitter on my computer. I haven't done that. So basically, what happens is, well, not what happens, but hang on. Just go
Bro,
to.
whoa, Bits. Oh my gosh, I thought Bits was talking about your dress. I was about to call him out, and I think he was talking about the charts because he's also a big into the shorting game. That's hilarious, Bits. I almost called you out, dude.
Okay, so if you go on my profile here, hang on, let me. I don't want to open up any weird DMs, but see how it says Futures Basics. If you click on that, I actually need to update this. But
Oh wait,
this,
no, I don't see it. I only see your chart still.
you still see my chart?
Yeah. Maybe
Oh,
when you click present screen, you may have selected one tab / one thing. I usually just go entire screen.
I thought I did the whole. Hold on, let me check. Because let me try again. Present.
By the way,
Share
for anyone who's
screen.
watching the stream and tuning in, definitely give Minx a follow. Check out her Discord. Check out everything she's up to. If you're into futures even a little bit, you're gonna want to get connected with her because she's one of the hubs for sure, and a great place to learn from. But yeah, definitely give her a follow. If you're on YouTube, just go to the description down below, and then click her profile. If you're on X, just click into the title and give her a follow and repost the stream. Hit the repost button, quote tweet, tag a friend. Oh, there we go. I see it.
All right, thanks. Yeah, it looks like I did not share the whole screen, but so if you go here, it says Futures Basics Community. This is free. I've been teaching this for years now.
Nice.
Most of FinTwit is doing futures because I've been, just kind of teaching everybody about it. But this right here is going to explain everything, how to get started, like the basics of it. And there's a PDF, I think somewhere in here. Also, like there's different, prop firms that I use, but there's a PDF also in there that you can, if you don't have time to watch this or whatever, you can kind of go, look at the PDF and, but it's fairly simple, to get started as far as let's just say. So this webinar actually is going to explain different things. It's going to explain if you are wanting to use your own money, trade with your own money, I go into depth, how to do that. So, you can utilize your own brokers, but there's margin requirements. So there's different types of margin requirements depending upon what broker you're using. Otherwise, you can do a broker that specializes in futures. Margin requirements are significantly different. So just to give you an example, if you go through, let's just say Interactive Broker, okay, their one contract of ES is like $16,000. But that's if you want to swing, or whatever. But if you go to Ninja Trader or Trade-O-Eight, one of those platforms, they specialize in futures. They have a margin called intraday. So all you actually really need is, $500 to $2,000 margin. For one ES contract, it's $500. But that's for day trades. So, I'm a scalper. I'm a day trader. I don't need to leave a position for, 2 weeks. So I don't mind, doing $1,000 for one NQ contract, because if I was to do that full margin or the initial margin, it would be like 23 grand for one NQ. Well, I can get 20 NQs, 20 contracts for that amount. It just kind of swipe, you know what I'm saying? Like it just depends on how people are, what kind of traders they are. And then if you utilize a prop firm, basically the way that works is, you go to one of the prop firms and, depending upon what you are wanting out of it, some of them are like this one right here, you are able to withdraw money daily. And actually, I posted the other day, yesterday, I think I posted just how fast they transfer money into my account. When I request a payout, it like literally within a few hours, not even a few hours, it just, it's in my bank account already. It's faster than like transferring money out of my brokers. But you basically demonstrate to these prop firms that you're a successful trader. So you pay a small evaluation fee, which is a sim account. Okay. If you succeed, then you are given a funded, account to trade with. So, you keep the proceeds up to, all prop firms are different. So I'll just say like Apex, you keep up to $25,000 sorry, 100% of the $25,000. But after the $25,000, you keep 90% of the profit, and they keep 10%. Now, people are going to think, well, is this too good to be true? It's not. So most traders fail due to lack of discipline. Let's be real. 90% of traders fail. It doesn't matter if they're trading options, crypto, futures, equities. It's just inevitable, right? But if you are disciplined, and that's how these companies make money, is because they know that traders are going to fail, whether they're using their own money or the prop firm money, right? So if you are able to chart, and read price action, you start out small, you become consistent, you learn, you will be profitable. I mean, just look at, I actually posted my P&L today. I usually don't do that, just because I don't want people to like try to full port or, whatever.
Sure.
Like right here, this is different accounts. So these are different prop firm accounts. So
Nice.
some of these are, I'm up $2,000 on a couple of them. Some of them are 20 grand, 24,000. These are different, accounts. Yep. I have losses too.
Sure.
Nobody's perfect. So, but you can level the playing field by having multiple accounts, because I can actually simultaneously trade them. It's one chart, one click, and then it copies it into all of your other accounts. So that's how I trade it.
Interesting. Wait, hold on. So you use the same trade for all the different accounts, and you do it once, and it goes through and does the rest?
Yep.
Very nice.
So like these accounts, these one up here, I traded these together. So like if I was, I don't know, short for whatever amount of contracts, this is the money that I made. So I basically, let's say I clicked on this account and it copied it into these. It's not going to be a perfect P&L, like exactly the same, just because of the fills, and it takes a little bit of time to fill. And same thing with these. So it's like these two are the same. So one chart, it's called a trade copier. It has a trade copier built in, so you can copy your accounts. So as soon as you hit buy, it's gonna, and if you selected the other accounts, it's just gonna do the same thing on all the other accounts.
And,
so,
wait, and then can you tell me one more time what the benefit of that is versus just doing it on one account?
Well, I mean, there's obviously pros and cons. If you are green on one account, you're going to be green on all of your accounts, right?
Okay.
Obviously, if you are red on one account, you're going to be red on all of your accounts. So, what I usually try to do, I don't try to, and I have done it before, but I've also lost a lot of money, copying all of my accounts into like with one trade. Well, sometimes these, trade copiers don't work the best when they're kind of overloaded, I suppose, when the price action's moving too fast or whatever, if there's a glitch. So I try to rotate, take like 3 or 4 accounts and copy one trade, and then I'll be done with those accounts. Then I move on to like 3 or 4 other accounts, whether I'm green or red, whatever, I'll move on to another. So it's kind of like I can trade them in what do you call it? Like in a little lump sum instead of like trading one by one. But I would not recommend somebody doing that as soon as they start. One reason to have a trade copier or multiple accounts is because you can actually spread out risk. So the way that happens, a lot of these, what people don't understand about these prop firms, they do have trailing, intra. It depends, I guess, which prop firm, but there's trailing unrealized gains. There's a maximum loss. So the way that you basically pass these accounts, so I'll just kind of give you an example so you guys understand, because it's not that difficult. Actually, there are firms like Tradeify You can buy an account and you're funded right away. So the money that you make on there is what you get to keep. If you continue to grow your account, unless you become a degen and you
Yeah.
blow your account, which happens. I mean, nobody's perfect, so we've all blown accounts. That's part of the process. But basically, um, say you are trading a 150K account. Um, they allow you. Well, I'll do a 50K account. Okay, so 50K account. They want you to make a profit. So the profit goal is $3,000, and the trailing threshold or the drawdown is $2,500. So if you go up, you make a profit of $3,000, you basically get funded, right? If you go below that $2,500 trailing, this is for Apex, you're going to lose your account. So it's not that hard. But it's really like the psychology and the risk management of it, because I've seen people, it says you can get 10 contracts. Yes, but just because you can buy 10 contracts does not mean that you should, because just the way the price moves, you're going to lose your account. Just like I mean, the price can move 20, 30 points up and down, and if you full ported, you're going to get smacked.
Yeah.
So that's kind of like, but again, different prop firms have different rules. That's another thing is, people don't look at the rules. They just kind of go on and they're like, hey, I want to trade this. I'm going to trade this, But I'll tell you, so many people, like in my Discord and other places, I mean, this has been life-changing money for them. I know like one of my analysts, Rizzo, he made like so much money with the prop firms that he and a lot of times most of us also trade our own accounts as well at the same time. He'll right now he'll hit 60 70K a day in his personal account, and he just turned 24, so it's like the age and all of that does not matter, because it's a skill set that you develop with the risk management consistency.
Right.
And somebody doesn't see $64,000 in a year, let alone in a day. So it's it has been life changing for so many people. But at the same time, there are people that complain about it, and at the end of the day, a lot of times it is because they didn't manage risk.
Yeah.
The only way to really lose any account is if you don't manage risk. So.
Mm-hmm. Yeah, that makes sense. This is a solid breakdown of the futures. I want to dive a little bit into like how you go about either charting it or looking at a chart. Like I was wondering if we could maybe pull up. I mean, you can pull up a crypto if you want, or a Bitcoin, or if you think it's a better example to pull something else up. But just sort of like how you go about things. Like there are indicators I see, there are lines people are looking at. You're drawing Fibonacci's, all these things that people are using, and not everyone uses them. I know traders who really don't use many indicators. They're very good. They've been doing it for a long time, and they're like, yeah, I just don't use them anymore. I kind of can just see it, and I was like, I wonder, because I see people who are pro traders who have been trading just as long, who are doing all those things, are still writing down all their trades, and I don't know if you have any thoughts on that. I'm curious on how you sort of go about it.
So yeah, I mean, I can. Well, here's the thing. It depends what you're trading, right? If you are trading meme coins, you're not going to need a chart or these indicators or whatever, really. If you are trading NASDAQ, you better have something, because there's no way that you can just eye it. And the reason why I say that is because this is a $20,000, $21,000 instrument, right? It moves, it's volatile, it moves fast. The reason why this is TradingView, I actually usually don't trade on TradingView. This is, hang on. This is NinjaTrader, okay? This is what my NinjaTrader looks like. These indicators that I have on, these squiggly lines, they're used for different types of trades. One thing about people is that I have found, so my mentor is a retired market maker. He worked on New York Stock Exchange for over 30 years. And my second mentor is Peter Tuchman, Einstein of Wall Street. I'm sure you've seen him, you've heard of him. I know I've put the guys, Jordy and them up to go visit the New York Stock Exchange and meet him. So basically, there are different types of trades. We have trend trades, we have parabolic trend trades, and we've got like regular moving average trades. So some of these are used for different types of trades, right? If we are in a downtrend or in a uptrend, whatever. And then these right here, like where I just clicked on, these are key levels, they're pivots.
Mm-hmm.
And these don't move. These stay on, each day they get recalculated.
Gotcha.
So basically what what they are is, just one second. So the pivot point, itself, like it's a mathematical formula. So it's just a key level that, like I said, it doesn't change throughout the day. The pivot point's basically like an average of an intraday high and low, and then the closing price from the previous trading day. So, on the subsequent day, so this purple line is that's my pivot point. If we are trading above it, typically a lot of times it means it's more of a bullish sentiment. But when we are around it, it tends to chop. So as you can see here, this is kind of where we're consolidating, until it made a move. The reason we got this move to the downside was because of the data that we had this morning, the non-farm payroll. Gotcha. It came in a little too hot. So when we broke below it, well, we just went straight down. I mean, this was a news scandal. We try to retrace back, and I don't know if you can see these squiggly lines, like the blue line and the red line. So because we were in a downtrend, this is my moving average. So EMAs, that's what I use. They're just used to monitor the price over time, and it just kind of identifies the price trends, and it does assign greater significance to more recent price data when we're looking at these EMAs compared to simple moving average. So basically, when we are in a downtrend, let's say you missed this move and you didn't long up here. Now you want to trade, but you don't know where to start. You would enter at either EMA 5 or EMA 9. Typically, you would want to wait for EMA 9, more specifically EMA 15 if you can. But I'd have to go through the whole thing to kind of teach you. But if we go up to right here, we went to EMA 9, we rejected it, and we came right back down. So if you entered your position here, a short, you could have ride that short down. Or if you're kind of like me, I like to scalp. So I would have came down with this, and then as it goes back up, I would have exited my position or left maybe a few runners, and then I would re-enter again, and then come down, and then I would re-enter again. So if you see how precise, so my way of trading is being precise. You cannot eye something, you can take off all of your indicators, and I have years and years of screen time, especially being full-time and being on voice chat all day. I'm telling you, you cannot eye it. Yes, you can see at times when it's a double bottom,
Yeah. Or so I was going to say, the first thing I saw was that first time where you shorted, it lines up with those other times where it's bounced from the previous level. And I was like, that's the only thing my brain saw. Other than that, everything below, I was like, yeah, you're going to be guessing if you don't have some of those indicators.
Yeah. Yeah. Or a lot of times they'll do trend lines, trend trades.
Okay. Am I crazy, or are trend lines like nonsense? Are you talking about the one where they literally just draw a straight line for the top? They just connect lines. I've just never used it because they never end up panning out. Every time I see one, I'll check back in a couple days later, and it never does what they say it's going to do.
Yeah. So trend lines, yes, people use trend lines. I rarely use it. For sometimes, I don't know, just because I see everybody using it, like sometimes I'll try to use it, And then I'm like, you know what? I don't even know why I'm trying because my levels and my technical analysis literally like to the dollar. Um, I mean, it's
Yeah.
not like it's fairly close. Like here, where we it's kind of hard to see, and this is Ninja Trader, and I can't like it won't let me kind of zoom in, but I don't know if you can see when we broke below this thing, we came almost
Wow.
to this level here. We were off by I don't know, not let me see what the low was. 21.45. Um, and this is 21.34. So we're off by like, I don't know, maybe 9 points, which is nothing in NASDAQ. But then when we went back up, I don't know if you can see this key level here where the wick is, this little thing right here. We went right to that level and came right back down. So I like being precise. And when my members or whoever is kind of, I teach this for free in the server. I want people to learn how to fish for themselves. At the same time, because once you start doing that, you become more confident. It's easier to take trades. It's easier to follow someone that's, taking trades. You see why they're taking a trade. And I like being precise. I mean, even by there are times where I get upset, like if I miss a move because it didn't hit, it was like 4 points away, But if people are just trying to eye a Nasdaq, they are probably eyeing I don't know the double bottom, the double top, that kind of a thing, or where you see so many wicks. Because I mean, I can take these pivots off. I don't really like using Trading View. But I mean, you can kind of see where it wicked multiple times, right? And, you can eye it from here, like, okay, maybe I should start a long.
Right. Right.
So that's the only way to eye things. But when I
And that's
trade,
how it is in meme coins. That's basically what you're doing. You're saying, okay, this is a pass line that I can maybe trust, probably, unless a whale dumps on me, and then you make the bet.
yeah. And and with me, I like being precise. I like
Mm,
calling out a level, and it works out. Like I call it out like before obviously
sure.
before it happens, and I'll say if we go below. Let me see. Uh, sorry. So earlier I called out, like actually, right, when you messaged me about this.
Yes.
So not even like an hour and a half ago, I called out a short again. And I said, if we go below 2150, which is going to be more prominent on here, $21,050 and a retest rejection, I'm taking a short. And we came down quite a bit from there. So today was like a short the pop kind of a day. And when I say short the pop is when we pop up to these levels, precise levels, you enter a short, write it down. You
Yeah.
can write it, So it just kind of, it depends how people trade, but I like to be precise, and I like to play the markets both ways, not just I should say I love to short. Okay, I know it sounds bad, but I'll still long, Um,
What do you find yourself long? Is there anything that you found reliable to long for yourself?
so what I do is I'll long, well, whatever the market is telling me, whatever the price action is telling me. If we're bullish, I'm not going to be shorting,
Right. Right.
So
Or-
there, it does just depend on whatever the price action is. But whenever I show up to the market, it just tends to drop. So I
Oh
just,
no! And somebody get Minx out of here.
yeah,
Someone
that's
just dump her down.
exactly. Ask Wolf and all the other guys there. As soon as I show up, they're like, "Nope, leave," because
I'm so dead.
we're no
That's
long.
hilarious. That is
So
hilarious.
yeah. So that besides that, I don't
So,
know.
I question. So you mentioned that for people who are trying to get in, oftentimes you're going to need to like lock in for either the New York or the London Stock Exchange, because that's when all the action is. I mean, you can not trade those, but like you're not going to catch the big moves that are going to make you that 20x, hopefully, kind of thing, you know? So what is the strategy? You go in an hour before, 3 hours before, the day before, the night before? When do you go in and look at the charts before it opens and place your bets?
So I wait until a little bit past 8:30 in the morning to do an analysis for NASDAQ. And the reason is because a lot of times we have data that comes out at 8:30, and that data, like this morning, the data came out and boom, we dropped, right? So what I like to do is just wait and, to make sure we don't have any data coming out, whatever. And then I do my analysis. I write out, exactly what I'm looking at, where we're trading at. If we are at a certain level, here, let me pull this back. Hang on. If we are, for example, if we've got resistance at 21,159, we get to there. If we reject, so we have to, reject, come down, flush through it, and then again retest it and reject. That's where I would take a short. So I write that out beforehand, early in the morning, and then as the market starts to open, that's when we really know how this plays out. I'll have, if we are above a certain level, we're going to be long. If we're below a certain level, we'll be short. And then I'm live on voice chat, basically saying, okay, if we go to this level, retest it, kind of, it's a confirmation. I'm short, and people will either, jump in with me or they're going to wait, whatever, it's not everybody likes to trade the first 10, 15 minutes of the market. I love it. I find that as my edge, just because I use these, I don't know if you can see this. This is order flow footprint. And this is on the 1 minute, but I do have it on the other minutes. And, I am able to see what's happening within a candle.
Whoa. Yeah. I have never seen this before.
Yeah. So this is what gives me the edge to do what I do. There's 99% of people have probably never even seen this. Or say traders, not people, but it's basically, here, let me pull up the 5 minute. So within these candles, it shows you, although it's pretty long, obviously, but it shows you all the orders and the sellers, like who is more aggressive. Is it the sellers? Is it the buyers? Is it, are we losing delta? And that kind of a thing. Are we gaining around? So see how, okay, right here, this is my key level where it's this little green line. I don't know if you can see it very well. 21,159. We are around it, right? So I would say to my people, we've got resistance actually here, just to prove, right here where it says, we have resistance at the pivot, and this is at 7:42 in the morning at 21,159, and then the next level up. If we reject and retest rejection on each price target, we can take a short from there. However, if we go above and we hold above, we would take a long, right? 21,159 right here. We did go up above it, but what happens is they know. So the market makers know that nobody's going to place their stop losses at this level. If you are entering a short, you're going to place your stop loss above. They go and grab that liquidity above. And guess what? This is a little arrow that shows that we're losing delta. And I just knew, this was a key level. We try to retest, test it a few times on the 1 minute, because this is my 5 minute. And usually when that happens, we dropped from 21,159, is where we would have entered a short, all the way down to 21,050. So like about 100 points, okay? But remember, 1 point is $20. And this happened in 10 minutes. It's a 10-minute trade. So
It's insane. I've never seen this before. I'm gonna have to poke into this a bit more. I did just get a text. I have to bounce out of here a couple minutes earlier than I was hoping to, but man, this is such a cool way to end it because I've literally never seen these before, and that was a really, really fascinating breakdown.
yeah.
Man.
So
okay, very cool.
Alrighty. Well, thank you for having me. I hope I hope you guys learned something. You know, if you have any questions or if you want to have me back on to do this again, I'll be happy to do that.
Yeah, definitely. Thank you so much for coming on. And if anyone's watching, if you're interested at all in trading, especially futures and especially shorting, you're going to want to give Minx a follow. Jump into her Discord, whether it's the paid version. I think you have the free version as well, you said, right?
Yeah. Mm-hmm.
Yeah.
Yep.
Okay. So hop in one of those and get started pretty much. I think is the move. Watch some YouTube videos if you need to. I highly recommend it. It's a skill set worth investing in. So definitely give Minx a follow on Twitter. If you're on YouTube, check out her Twitter. I see Calvin in the chat as well. Calvin, what's up, man? Oh, we got a few people say bring her back. All right. You know what? The people want it. We'll give them what they want.
Right, sounds good. All right, guys. Thanks for watching and have a good day.
We'll see y'all, everyone, later.